Welcome to Option Trades Today. I'm Tony the Bat Batista, and we're going to find a trade for you today. April 11th, 2023, and it's almost 75 degrees in Chicago. That means spring has sprung, but what has not sprung is volatility. We're going to take a look at the E-mini S&Ps right now, up $1.50. Really no movement for most of the day. But the big story is volatility, 1950. Look at what's been going on the last couple of weeks in volatility. Totally collapsing, helping a lot of the existing positions we have on, but making it very difficult for new trades. Now, you know, in past videos, I've liked to look at the high option volume list that we have here, and I like to go to the IV rank and click it until it goes from high to low. And if you notice in here, there's not a lot of stocks that we like to trade, or I like to trade through here, which are really mostly a lot of NASDAQ stocks, which is weak relative to the rest of the market the last couple of days. But look at this, earnings. Earnings are all inside that expiration that we're going to be in. So what I did today was, and what I like to do for future trades, and we actually got a phone call about this today, how do you trade these stocks with earnings in the month that you're trading? I like to try to avoid them, especially when I'm only trading on this podcast twice a week for you and trying to find the very best of the best trades. Now, how can I do? I click on earnings and I bring them so I'm showing them in order where they start from today going all the way down. Now, from what I want to look at, expiration is on May 19th. So that's 519. So I want to go to this high option volume list and go all the way down to 519 and below. So you're looking at target here, 517 and below. So I'm going from here on down and looking for stocks to trade with high implied volatility. Now, we did on Thursday a Costco trade where we were hoping volatility would actually expand a little bit in the back month. Volatility actually went lower, but we got lucky on the price. It was a bullish trade in Costco. I know some people, I took 50, 60 cents on it. I know some people took $1 or more on that trade in 48 hours, so that worked out nice for them. I'm going to try to do the same thing for you today, but the trade I'm going to look at today, believe it or not, is BABA, down $1.50, trading right at $100 as we speak right now. Let's just take a quick look at a chart before we come back here and go through some of the numbers. Here's BABA going sideways over the last week or so, and volatility really not percolating at all, going sideways with BABA. Now, I want to look to sell some premium. I have money sitting on the sideline. IV rank of 14 is relatively low. I'm going to paint a story for you in a moment, but first, let's take a look at what we see here. Over the last 5 days, volatility, well, it actually just went down 1.5%. It was down 0.5% when I was looking at this trade earlier. IV percentiles, not any better at 12. IV rank of 14. The only good thing it has going for it is earnings are after expiration that we're going to look at here in May. So what am I looking to do in BABA? I am going to look to sell premium. I am going to reduce my size dramatically because the IV rank is so low. So this is a much smaller trade than normal. You know, if you're a 5 or 6 or 7 contract trader, maybe you're doing 2 or 3. If you're a 1 or 2 lot trader, maybe you're not doing any at all, or you're going to default to your lowest number, which would be 1. All right, what am I looking at doing here? Okay, I'm looking at going to around the 20-ish delta option. You'll notice that there's plenty of open interest. There's plenty of volume on it today. Markets are good, not great in BABA. I will give you that. There's a lot of things going against making a trade in BABA, but I'll show you one thing that really caught my eye. The thing that caught my eye is take a look at the monthly implied volatility prior to earnings. Earnings are on May 25th, and these options expire on May 19th. Look at the volatility. It's 53. Look at the month after earnings. Look at the month immediately following May with 45 days has a 51% implied volatility, and the Junes have a 53%, the same as May, but yet May will have expired prior to earnings. So I look at it as like I'm getting like earnings volatility expansion on the monthly options without having to worry about earnings coming on May 25th. Hey, that's my story, at least, and I'm sticking to it. So what am I looking to do? I'm going to do a classic strangle here using the 20-ish delta options. I sold the 90 puts, and I sold the 115 calls. This is about as completely delta neutral as you can get. I did it for $4.14. You can see that on the follow page. If you take a look over here and you click on Bob the Trader, that's me. And you see, here's a trade I did earlier. I did it for $1.14. It's got a 66% pop, and I think I just called it a classic delta neutral strangle using 20-ish delta options on both sides. Now, it has come in a little bit. I don't think you would press this trade at all. I got filled 1 penny below mid price, so I'm assuming if you had to get filled right here, right now, and the mid price was 405, I would get filled at 404. I would not look to move this much more than a penny below or above mid price, depending on what type of trades you're doing in Baba. I did the 90, 115. This is a margin account. I'm using around $2,900. Let's say you're in an IRA account. If you're in an IRA account, you might be using something like $8,000 or $9,000 to put on this same trade. So what would I look to do? Well, I'd look to simulate the same amount of buying power here, and you could quickly go down around $15, meaning I'm going to buy the 75 puts and go up to the 30 calls. And you notice here on the right-hand side, I'm using around $3,100, $3,200. I was using around $2,900 in a margin account. Now, of course, you are paying almost $1 for the right to use that less buying power. I would not look to put on more contracts just because I'm using less buying power if I was in an IRA. I'm just trying to keep it all consistent. So for me, what am I doing? Well, I'm in a margin account. I'm doing the 90-115. That's a completely delta neutral spread. You can notice that I'm only $10 away to the put side, yet I'm $15 away to the call side. That means there's a little bit of call skew going on here in Baba. All right, listen, if you haven't moved or transferred or brought your account to Tasty Trade, that's the platform I'm using here. That's how we keep the lights on here. Help support us so we can keep all this free content about trading and the show running for you guys. I love doing the show. Hope to be here for a long time more, but I need you to like, subscribe, and then please transfer or move your account to Tasty Trade, the best trading platform in the universe.